Okay, so what exactly determines whether a trend line is strong or weak? So firstly, the more price comes and touches the trend line, the stronger the trend line is. So if the price is bouncing off that trend line quite a lot, it determines that that trend line is more reliable. So if price is made to obey a trend line more than once, consider that a strong trend line. You will also notice that on charts, the most reliable or strong trend lines are gently sloping trend lines. The steeply sloping trend lines are generally very unreliable. So the steeper the trend line is, the very much unreliable it is. So it needs to be more close to a horizontal state than being a vertical state, in a vertical state, right? So that's what we mean there by steeply sloping and gently sloping. So very steep trend lines are very weak. They cannot be sustained for long. So as you can see right here, for example, the price actually came and broke this trend line right here, even though it was it had no obstruction in between, it had no obstruction, but it was broken because it's very steep. Steep trend lines are most often weak or very unreliable because the market cannot be sustained at this steepness for a very long time. So price only obeys the trend line once or sometimes not at all. So notice on the chart above that the price moved up very steep at a very steep angle and couldn't even obey or find support on the very steep trend line that was drawn. So it only came back and tested it once, but the second time it broke through it, and then here it made Morningstar a little bit higher than it, but basically as you can see, it was too steep. The market has to come back and retest this level as well. So as you can see, that is what we mean by very steep trend lines. They are not very reliable, so you should be looking for more gently sloping trend lines than very steeply. Later on, the price found a much lower level of steepness, which was sustained, and then it continued to move up. So basically here we can actually say we could have had another trend line being formed right there, right? As you can see right there, we would actually have another trend line being formed right there, which is much, it's more reliable, as you can see right there. So this is a more reliable trend line than this one is. This one is way too steep compared to the second one. So that's basically what we mean by that. So your aim should be to find more less steeper trend lines. That way you actually have a more reliable market condition. So price tends to react predictably on gentle sloping trend lines by obeying it than on a steep trend line. So as we just showed you earlier right now. So here after point 1 and 2 were used to draw this upwards trend line. Notice how many times the price actually respected this trend line. As you can see, we had our touch there, another touch there. The less steep a trend line is, the more price obeys it. So gently sloping trend lines are very strong trend lines. So always keep out an eye for multiple trend line setups so that you can have those less steep ones which are more reliable. Okay, so some important information to take note of. If you're in a steep trend line trade, I encourage you to take your profit quickly. So you shouldn't hold your trades for way too long. So when you see those potential turnaround points, you take your profit. Lock your profits or move to break even, because steepness cannot be sustained for a very long period of time. So secondly, you need to understand that don't rush to get in a steep trend line trade, especially if it is on the second or third buy or sell setup. Don't rush to get in on a steep trend line trade, especially if it is on the second or third buy or sell setup. So there is a greater probability that the market has lost its steam and may start to reverse very quickly. So the steeper the trend line is, you need to give it more time. The more time that you need to give it for it to really show you the true direction of the market, because it might actually just move those 2 points that you need to draw the trend lines, and then on the third position it actually starts to lose momentum and change direction. So it's very key that you give it more time if it's very, very steep. When you draw trend lines, we operate on support and resistance. So basically a trend line itself is a support and resistance. It's not horizontal, it's just diagonal, vertical, whatever you want to call it, but basically a trend line is a support and resistance as well. So when drawn in a chart, it indicates where the price is mostly likely to find diagonal support or resistance in the near future. So that's why we draw our support and resistance. For example, right here, as you can see, we connect the 2 points right here, but maybe the market is only maybe the market right now currently would be somewhere right here. So the market is currently somewhere right here, but we will draw our support and resistance passing that point all the way, completely full on the chart, so that we can see there's some potential points in the future where the market can try to capture. So you don't draw your resistance point just to connect the 2 points, but it's a forecast. We use it for forecasting the future. So it's a forecast indicator, or you can call it that, but it's not an indicator. It's a trend line. It's a trend line. So it's just a line. You just draw it but you must push it through all the way into the future to see potential points where the market's going to come and try to touch those points. So that's what we use our trend lines for, but it's basically diagonal support and resistance. All right, so right here on this chart you can see that this is a bullish trending market. So in a bullish trending market, the upward trend line provides support for the prices. So this is our support. So remember, support is basically the structure that stops the price from going down, right? It prevents it from going down. So every time that the price comes here, this is our opportunity to buy, so that we can get in on this uptrend and basically capture our buy positions, right? So prices go down, touches the trend line, and bounce back up from the support of the upward trend. So as you can see, this is what is happening. It had a minor break here because it was getting steeper, as you can see, because the market was pushing down a little bit, but basically it carried on going up, as you can see, until it was broken, and then there was a retest. And then in a bearish market, is basically just the opposite of exactly what we just spoke of. So this is a bearish trending market. The trend lines provides resistance to the market. So as you now know, our resistance is a level in the market that prevents the market from breaking through to the upside. So this stops the price from breaking through to the upside, and that is what we call our resistance. So as you can see, it's actually this trend line is acting as a resistance to the market in a bearish market. So that's why we call that, that's why we say a trend line is a support and resistance, but it's just diagonal. It's no longer horizontal like our normal support and resistance level. So in a bearish trending market, the downward trend lines provides the resistance. Price goes up and reverses back down from the trend line. So it bounces off that to the downside, giving us opportunities to enter the market. So we are aiming to enter the market right there, right? So this is basically a quick illustration of what we should expect in the downtrend and uptrend market when we draw our trend lines.